Welcome back. We've got the market, which is absolutely flatlined. And we're sort of, of course, coming up in 10 minutes is going to be the LG listing, the LG Electronics listing. But of course, indicative open is 40, 50 odd point premium on top of the issue price. We reported yesterday in the last hour of trade is that the SEBI's thinking with regards to, what they want to do on the derivative side, especially weekly options expiry, which has been such an area of focus for all market participants, has undergone a bit of a change. Or not. Basically, what we reported is this, and this is all source-based information, that changes to weekly options expiry will only be looked at if data that is specifically data from July to September, which SEBI will study, shows significant, heightened, unusual retail participation. SEBI will look at many other measures, things like deepening cash markets, taking away disincentives of longer tenure derivatives, or rather incentivizing longer tenure some of the derivatives contracts, etc., etc. And then basically the bar to act on weekly options is going to be not low; it's going to be high in that sense. The BSE stock, of course, reacted. It's up about, it was up to 3% this morning. It's come off a little bit from the highs now. We have K. Suresh, National President of the Association of National Exchanges Members of India, Rajesh Baheti, Managing Director, Cross Seas Capital Services as well. Gentlemen, good morning. Great to have both of you here. Mr. Suresh, I'm assuming you've also, and your members, everybody's written to SEBI with your sort of feedback on this, like so many others we understand have. Rajesh, I don't know if you have as well. Thanks for joining us. Your thoughts, Rajesh, to begin this with you.
It's interesting that we're discussing whether we should be having weekly option contracts here or not, while at the same time the GIFT Nifty NSE IFSC has launched daily expiry contracts, and while they've done that, they've extolled the virtues of having a short-term risk management product. So that product can be participated by every retail investor in the world, barring resident Indians. And so I think the debate on whether the product itself has merit or not should be put to rest. Now the question is, how much freedom does the Indian investor get to do with his money versus, the kind of moral arguments that you put forth that overtrading is not good. So the merit question should be put to rest now.
It's interesting the way you put it. Every retail investor in the world except resident Indians, or the product and GIFT Nifty daily expiries. So, what we reported, Rajesh, does it look like, the thinking is evolving, and in a way they can sort of are coming around to the industry's point of view, that maybe we need to do other things before we take a hammer to this product?
Absolutely, because when you allow zero DTE options on the international market on the same index, you're telling the world that it's okay to have such short-term trading products. So per se, I think that there is a thinking or rethinking within SEBI that we can't pull the strings too hard on the domestic market. You can't really suffocate the market here beyond a point. And liquidity is one of the main virtues of the capital market versus every other asset class. And you take that away. You take away the one good thing the capital market offers you over and above every other asset class. So I think that thinking is gone now. A realization has dawned upon SEBI and the powers that be. And I think they will find it very hard now to justify that while you have the zero DT products available on the Nifty for every other retail investor in the world, that the Indian investor should not even trade the weeklies.
Mr. Suresh, just wanted to get your thoughts in. So SEBI has indicated that there will be no change unless they see unusual retail activity. Now, what defines an unusual retail activity going forward? What could be the potential metrics? What could be the potential triggers?
Actually, SEBI is not also clear on that point. It's going on shifting its goal. Sometimes it says that fortnight expiry, sometimes weekly expiry per exchange, sometimes only one expiry. Like that, a lot of rumors, being floated. It has affected the stability of the market. As Mr. Bharati said, I mean, we are very particular about the stability of the market, and there must be an in-depth study or going down to the root of the cause and fix the issue instead of going on, I mean, scouting this may be the reason, that may be the reason, you know. So all are subjective only, or not, there's no objectivity in our studies also. So with a short-term data, how can we fix for the entire thing, you know, this is the best thing what we can do. So in our opinion, going on shifting the goals, you know, or giving rumors to market that this is what going to happen or this is what going to happen may affect the sentiment of the market, may affect the liquidity of the market, may affect the brokers' business model also. That's what we have to understand. Already, you know, brokers' business affected to a great extent.
Mr. Suresh, you and your members have written to SEBI with feedback?
Yes, we have given our feedback to a great extent about what should be done at this
What have you
juncture.
said?
No, actually, finally, the tagline of SEBI is what? Protecting the investors. That is the tagline. So instead of compressing the products, instead of compressing the other aspects, they have to focus on how to bridge the gap. So that gap is there always between informed investors and the uninformed investors in the market. I think already SEBI chairman himself said that 36% of the investors are well aware of the market, etc. That means the balance is left out without any knowledge. So here that very important role is nothing but educating the investors is very important. That is the only best solution as far as the market is concerned. Otherwise, you know, we are going on disturbing the what's called the rhythm of the market by bringing in new, fresh ideas, etc., shifting the goalpost, which is not correct. So we have to think aloud on the part of plugging the educational gap, which is very, very important in our view.
Rajesh,
you can bring even entry barriers, you know, you can bring in all those things. I mean, that will help us to have an informed investor as far as the F&O is concerned.
Rajesh, you know, we've discussed this earlier as well, and Yash put out in his story, all source pays, that they will look at other things to do if they find, I mean, at the end of the day, idea is to protect retail, but they will do it through other measures. And what could those be, Rajesh? What would you suggest?
So, I mean, if the government really wants to do that, then, you know, the STT on delivery is a very small component of the overall STT collection. Maybe the government should do away with the STT on delivery trading and to encourage more and more trading activity in the cash market. So encouraging another segment is perfectly okay. But you don't encourage another segment by shutting down one segment. I have very strong opinion on that. I've always had. And so we welcome any step. If you want to incentivize the longer duration contracts, if you want to incentivize cash market trading, we're all for it. But not by really putting brakes on another segment of the market.
Longer tenure contracts, are there any disincentives right now compared to shorter?
No, so there are no disincentives. SEBI wants to incentivize it. I think one of the things that they put forward is that we don't have correlation margin set-offs yet. We have that extreme loss margin, which is applicable to all positions. So when you do trade options or trade futures, which have a very strong established negative correlation and you're long one and you have a very strong positive correlation, and you're long one and you're short the other, there should be correlation set off, which is not available. So these are longer duration positions that can be incentivized by having lower margins based on the correlation and the net delta of your position.
You know, this thing about what you mentioned, right? GIFT Nifty and the one-day option expiries, Rajesh. It's a separate. It's set up as a completely separate market, different regulator, right? Everything is different.
Yeah,
so it's not
theoretical merit and demerit. The theory of finance applies to both, right? So you can't say it's a great product for that segment, but as a product, it's not good for here. So you can argue that we don't want to encourage excessive trading and we want to educate our investors, but you can't per se say that this product is not needed in the country.
Okay, Rajesh, we leave it there. Suresh, thank you very much, both of you, for joining us here with that sort of discussion pointed on, of course, focused on what the market perception now is with regards to these derivatives, weekly options contracts. You've heard that loud and clear from Rajesh specifically. LG Electronics listing on your screen, 50% bump up, 1700. If you can flip that around and look at the market capitalization as well, I think that should be